In a surprising turn of events that has shocked the financial world, Warren Buffett has made a bold statement criticizing Bitcoin. Renowned as the Oracle of Omaha, Buffett has crafted an extraordinary legacy through a proven investment strategy based on valuable and long-term growth. With an impressive track record and boundless wealth, he has built an empire that is a testament to his expertise. However, his audacious claim against Bitcoin defies conventional wisdom, leaving many investors scratching their heads in disbelief. After all, Bitcoin has risen from obscurity to become a force that challenges the very foundations of traditional finance. Regardless, when a legendary investor like Buffett doubts Bitcoin's investment potential, it forces us to question our assumptions. How could someone with such a remarkable track record and wealth be so skeptical about a technology that many believe will revolutionize finance? To better understand this, we'd need to figure out how the crypto revolution started. It all began in 2009 when an anonymous person or group using the pseudonym Satoshi Nakamoto introduced the world to a decentralized digital currency, which he called Bitcoin. Unlike traditional currencies where governments and financial institutions exert control, no entity can control Bitcoin. This decentralization is made possible by digital currencies' reliance on a distinct network called blockchain. The blockchain enables secure and transparent transactions without the need for intermediaries. In a nutshell, individuals can directly exchange digital currency with one another using blockchain technology, which ensures a secure and open process. Since its humble beginnings, Bitcoin has come a long way. Technology enthusiasts and those seeking alternative financial systems embraced the digital coin in its early years. However, as the years passed, Bitcoin's popularity grew exponentially, attracting attention from investors, businesses, and the mainstream media. One of the most remarkable aspects of Bitcoin's journey has been its phenomenal growth in value. In 2010, the first recorded transaction involving Bitcoin occurred, where someone purchased 2 pizzas for 10,000 Bitcoins. Today, that amount of Bitcoin would be worth millions of dollars, a testament to the incredible appreciation in its value over time. In 2013, there was a significant price surge, reaching a peak of over $1,100, sparking widespread interest and speculation, which drew more individuals and investors into cryptocurrency. Nonetheless, this surge was followed by a significant correction, highlighting the inherent volatility of the digital asset. The subsequent years witnessed ups and downs for Bitcoin, but its overall trajectory has been upward. In 2017, Bitcoin's price soared to an all-time high of nearly $20,000, causing a frenzy worldwide and attracting new investors. This momentous event signaled the arrival of cryptocurrencies in the mainstream media, with financial experts engaging in heated discussions and a growing fascination among the general public. While Bitcoin's price experienced a subsequent correction and entered a bear market in the following years, the underlying technology and its potential continued to attract interest. Governments, financial institutions, and large corporations began to take notice and explore the possibilities offered by cryptocurrencies and blockchain technology. As Bitcoin gained wider recognition, its adoption as a means of exchange expanded. Major companies such as Microsoft, PayPal, and Overstock.com started accepting Bitcoin as a form of payment, recognizing the growth demand and the potential benefits of integrating digital currencies into their operations. This acceptance by influential businesses further legitimized Bitcoin and increased its utility in the real world. However, Bitcoin's scarcity has also significantly impacted its value appreciation. With a limited supply of 21 million coins, its scarcity has attracted investors looking for an alternative store of value in an era of economic uncertainty. Some even consider Bitcoin digital gold a hedge against inflation and a potential safeguard against financial instability. Despite the amazing feats and buzz that Bitcoin has garnered, Warren Buffett remains skeptical and offers a contrasting perspective. Starting with his interview at CNBC, he famously described Bitcoin as rat poison squared and a mirage. The phrase rat poison squared suggests that, in his view, Bitcoin is not only a poor investment choice, but also potentially harmful or detrimental. Similarly, describing it as a mirage implies that Bitcoin lacks substance or real value, appearing attractive or promising but ultimately illusory. The highlight of his arguments against Bitcoin is its lack of intrinsic value. Warren has repeatedly emphasized the importance of investing in assets that have a tangible worth or can generate cash flows over time. And in Warren's view, Bitcoin falls short in this regard. In another interview with CNBC, Warren said, and we quote, You can't do anything with it except sell it to somebody else. It's like checkers, it's just a game. Buffett's criticism of Bitcoin's lack of intrinsic value challenges the notion that cryptocurrency is a legitimate store of wealth or a reliable investment opportunity. Unlike stocks or businesses that generate profits, Bitcoin produces no tangible output. Its value primarily relies on market demand and speculation, which Buffett views as risky and akin to gambling. In addition, Buffett has expressed concerns about the speculative nature of cryptocurrencies. He has warned against investing solely based on the expectation of price appreciation, stating, "I don't own any cryptocurrency. I never will. You can't value Bitcoin because it's not a value-producing asset. It's a real bubble in that sort of thing." Another perspective that has further heightened his doubt is the extreme volatility of Bitcoin. Over the years, Bitcoin's price has exhibited wild fluctuations, experiencing massive ups and downs within short periods. While such volatility may entice risk-tolerant investors, it also presents significant challenges. For Buffett, a legendary investor known for his long-term approach, this price volatility raises questions about Bitcoin's stability as a reliable investment. However, the extreme price swings seen in Bitcoin contradict this approach. Buffett believes investing in an asset whose value can swing wildly within days or hours is closer to speculation or gambling, rather than prudent long-term investing. Additionally, the lack of regulation in cryptocurrency adds another layer of concern for Buffett. You see, contrary to traditional financial markets that operate within established regulatory frameworks, Buffett believes investing in an asset whose value can swing wildly within days or hours is closer to speculation or gambling, rather than prudent long-term investing. Additionally, the lack of regulation in cryptocurrency adds another layer of concern for Buffett. You see, contrary to traditional financial markets that operate within established regulatory frameworks, the cryptocurrency market is relatively new and largely unregulated. This lack of oversight raises questions about investor protection, market manipulation, and fraud. Buffett's skepticism about unregulated markets stems from his belief in the importance of transparency and accountability. He has built his reputation on investing in companies with solid fundamentals and trustworthy management teams. The absence of regulation in the cryptocurrency market also heightens the risks associated with hacking and cybersecurity threats. For instance, numerous high-profile hacks and thefts have occurred in recent years, resulting in the loss of millions of dollars worth of cryptocurrencies. When you think of this, it's easy to understand why Warren Buffett is so concerned about people investing in cryptocurrency, especially considering how the lack of oversight makes it easier for malicious actors to exploit vulnerabilities in digital currency systems. Additionally, the need for regulation reduces the broader acceptance and integration of cryptocurrencies into the traditional financial system. For example, institutional investors and large financial institutions have been very cautious about investing in cryptocurrencies due to concerns about compliance, legal uncertainties, and potential reputational risks. Buffett's skepticism reflects this sentiment, favoring investments well integrated within existing financial structures and backed by reputable institutions. While some argue that the absence of regulation allows for greater freedom and innovation, Buffett's perspective highlights the need to balance innovation and investor protection. However, no matter what people think about Bitcoin, one thing is clear: having a safe and trustworthy place to invest your money is essential. Just like Warren Buffett and other regular investors stress the need for clear rules and protections to keep the market honest and stable, supporters of Bitcoin like Michael Saylor and Justin Sun also agree that the cryptocurrency world should have similar standards. Emerging as one of the most prominent advocates for Bitcoin in the business world is Michael Saylor, the CEO of MicroStrategy. His bold decision to allocate a significant portion of his company's treasury reserves to Bitcoin made headlines and sparked a wave of interest and speculation. Saylor's belief in the future potential of Bitcoin is unwavering. He views cryptocurrency as a digital equivalent of gold, a store of value that can hedge against inflation and the devaluation of fiat currencies. According to Saylor, the finite supply of Bitcoin, capped at 21 million coins, gives it scarcity and inherent value, similar to the precious metal. Saylor led MicroStrategy to acquire billions of dollars worth of Bitcoin to capitalize on his conviction, making it one of the largest institutional cryptocurrency holders. This strategic move demonstrated Saylor's faith in Bitcoin and signaled his confidence in its long-term viability as an investment asset. Saylor's perspective on Bitcoin value proposition extends beyond its scarcity. He emphasizes its decentralized nature as a compelling feature that sets it apart from traditional financial systems. Furthermore, Saylor recognizes Bitcoin's potential to reshape various industries beyond finance. He sees it as a technological innovation that can revolutionize supply chain management, voting systems, and digital identity verification. This broader perspective positions Bitcoin as a financial asset and a catalyst for disruptive change in the global economy. Saylor's advocacy for Bitcoin has resonated with many entrepreneurs, investors, and enthusiasts who share his vision of a decentralized digital future. His outspoken support has contributed to the growing acceptance and adoption of Bitcoin as a legitimate investment and asset class. In 2019, Justin Sun, the influential founder of the blockchain platform Tron, made headlines in the Bitcoin world with his interaction with Warren Buffett. Sun, who participated in a charity auction hosted by Buffett and won the opportunity to have lunch with the legendary investor, intended to discuss and showcase the potential of cryptocurrencies, particularly Bitcoin, to Buffett. During lunch, Sun presented Buffett with a Samsung Galaxy Fold smartphone loaded with Bitcoin as a symbolic gesture. The aim was to demonstrate the functionality and value of digital currencies, hoping to ignite Buffett's interest in the emerging asset class. Sun believed that by personally experiencing the technology, Buffett might reconsider his skeptical stance on cryptocurrencies. However, Buffett's response after lunch was unexpected. He disclosed that he had disposed of the Bitcoin gifted by Sun, and reiterated his position of not owning any digital currency. This revelation underscored the stark contrast in perspectives between traditional investors like Buffett and the proponents of cryptocurrencies like Sun and Michael. Buffett's decision to dispose of Bitcoin showcased his unwavering skepticism towards cryptocurrencies and adherence to long-standing investment principles. As a value investor, Buffett places significant importance on tangible assets with intrinsic value and consistent cash flows. The intangible and volatile nature of cryptocurrencies like Bitcoin does not align with his investment philosophy. On the other hand, Sun's gesture represented the optimism and belief shared by many proponents of cryptocurrencies. The presentation of Bitcoin to one of the most influential investors in the world was a symbol of the growing influence and acceptance of digital currencies within certain circles. Sun saw the potential for cryptocurrencies to revolutionize finance, decentralize power, and provide financial sovereignty to individuals worldwide. Therefore, the interaction between Sun and Buffett sheds light on the contrasting perspectives within the investment and business communities. It highlighted the generational divide and the evolving nature of finance and technology. Although Bitcoin and other digital currencies have shown significant potential and attracted a devoted following, it is essential to approach investment with prudence and conduct thorough research. Also, Buffett's philosophy reminds us to focus on tangible assets with solid fundamentals and long-term growth prospects. While cryptocurrencies may hold promise, it is vital to approach them as part of a diversified investment strategy, considering your own risk tolerance and investment goals. Conducting research, understanding the underlying technology, and assessing market dynamics is vital to making informed decisions in the volatile cryptocurrency market. In conclusion, while Warren Buffett's cautionary stance on investing in Bitcoin may seem contrary to its growth and popularity, it serves as a reminder to consider cryptocurrency investments carefully. By acknowledging Buffett's perspective and combining it with thorough research, individuals can navigate the complexities of cryptocurrencies and make well-informed investment choices.